Hi, I'm Mark Parsons, Chief Economist at ATB Financial. Today, I'm excited to be joined by Chris Doornbos, who is founder and CEO at E3 Lithium. Now, I've been interested in lithium in Alberta for a long time because I think it's a really unique diversification play that builds on existing strengths. Chris will get into that. But we really need to start thinking about how much we're producing for critical minerals here in Alberta and Canada, and whether we can exert more influence in the global market. So with that intro, I'm happy to introduce Chris. Welcome.
Yeah, thank you for having me.
So Chris, why don't you do a brief intro and tell us what you're up to?
Yeah, excellent. So I'm the CEO of E3, founded about 10 years ago. And we started the company by developing technology because we're operating in a resource in Alberta that's well understood, that's been producing since the 40s. And the missing piece that we needed was a technology to extract this lithium. And we started that in 2016, and it has evolved as it does over the years. But we're at a point now where that technology prove-out is pretty much complete. And so our business is taking brines from the Leduc aquifer that was discovered in the 40s. And I think you could say pretty much started the oil rush in Alberta. And we're taking what was called the wastewater. And for us, that's the money. That's where the lithium is dissolved. And we produce that water across our plant. We use our technology to extract the lithium. And we directly make a product for batteries. So we make a lithium carbonate, or we plan to commercially in the future. And that lithium carbonate can be directly manufactured into batteries. And it's a very cool opportunity. And so for us, we really love this diversification story. And we love the fact that we're out here trying to get this out and operating for the province and for Canada as a whole.
For this interview, I checked our production in Canada, and I think we're less than 1% of global lithium production. Is that correct?
We have two hard rock mines that produce a concentrate. So they produce a spodumene concentrate that are shipped overseas for processing. So that's our entirety of lithium, commercial lithium production today. So we don't actually make anything for batteries today. We just make concentrated products.
So what you're saying is massive potential, but we're not there yet.
Well, and neither is North America. I mean, in all of North America, there's 4,000 tons of lithium produced from North American resources that goes into the battery industry today. So the whole market, the whole production in North America is nascent today, pretty much.
Yeah, can you just elaborate a little bit on that, how far behind we are versus places like, I know a lot of lithium production is in places like Australia and China. Yeah. So you just give a bit of a global lay of the land?
Sure. So historically, lithium was produced in solar evaporation ponds in South America. The majority of lithium was produced there. There was one hard rock mine in Australia called Greenbushes, and that was the entirety of our lithium production globally. Since the advent of the lithium-ion battery, we need a lot more lithium than just that. And so a lot of those productions that we're already operating have ramped up. Where the biggest production of lithium battery products from, the processed lithium, is from China. About 75-ish% of our processed lithium comes from China today. But when you look at where those molecules of lithium are coming from, a lot of them come from Australia. So about 50% of the raw lithium molecules are coming out of Australia. And since 2016, they've been ramping up production, have done a very good job at producing lithium, but that's hard rock mining. So it's spodumene concentrate to 6%. It's railed to port and shipped to China for processing. And one of the big challenges when you talk about the global geopolitical arena is that we're missing the final step in North America. We're missing the processing. There's a couple companies like Rio Tinto, used to be Livent, and Albemarle that process their South American operations in North America, but we don't make very much final product here. Most of that's still coming from China. So that's one of the advantages to doing what we do, is that we don't require that post-processing. We make the final product here.
You're trying to make a go of it here in Alberta. This sounds like a really interesting opportunity.
Yeah, because of the way that we process, we take the brine, we make a lithium chloride, just like lithium salt water. And then from there, we just pretty much treat it like you would a water treatment facility until we get it to something that we can create a salt, and we make a lithium carbonate, which is salt. and we dry it and we put it in bags, and that can go directly into cathode. So the next step in the battery manufacturing cycle is that you mix your lithium with whatever other cathode materials. If you're NCM, that stands for nickel, cobalt, manganese. So those are the other components. If you're LFP, your lithium iron phosphate, those are the other components. But you mix them together to form a cathode, and then you make electrolyte, also has lithium in it. And those are the two products that are created with lithium. And lithium is absolutely essential, because you can think of it like the lubricant for the electrons in the battery. It forms a critical function. And so right now, to get that lithium into cathode, it's coming largely from China today. And if you want to build a domestic market, and there's a lot of impetus in Canada, in the G7, in the United States, to have local supply chains from start to finish, the raw materials processed to a final product that can go into batteries is absolutely critical. And so we bypass that having to ship a hard rock concentrate to China for processing. We make it here. And so therefore we can put it on rail and can go anywhere in Canada, in the US, in Europe for battery manufacturing. And that does set us apart from the majority of how lithium is processed in the world today.
Interesting. So let's dive a little bit deeper into E3 Lithium and some of the projects you have underway.
Yeah.
So can you give a brief status update? And what I'm really interested in learning is how close you are to getting to commercial operations.
We're developing our first project, which is called the Clearwater. The first phase of that's going to be about 12,000 tons, and then it'll scale to about 36,000 tons. To put that into perspective on the global market, last year's total supply in 2025 was about 1.5 million tons. But when you look at where the market's going, and there's some interesting data coming out, and depending on where you sit on the bullish curve of lithium market for the next 4 years into the end of the decade, you're talking about probably somewhere around doubling that to about 3 million tons. All of that is new supply. There's no other market for lithium. It's not like copper where you can kind of pull from other places. This all has to be brought on from new supply, either from expansion or for new projects. So that's where the real opportunity is for us. So 12,000 tons is the start on the Clearwater project, which is just east of Olds in Alberta, which is just north of Calgary, about 45 minutes. The project is very advanced. We've been doing this for a long time. As you mentioned, we have our reserves out. So we got a 1.1 million ton reserve on the project. Our pre-feasibility, which is like pre-feed, came out in 2024. We're currently working on feed today. We've also been operating our demonstration facility. So after the pre-fees, we took the design that was conceptual, and we put pen to paper, and we designed a smaller unit mimicking that commercial design. We got it fabricated in 2025, and we started operating it in September. And we were successfully able to commission within 3 weeks and produce a battery-grade lithium carbonate out of the back end. So we've been able to show that our design, commercial design, directly produces the final product at smaller scale, which is what demonstrations are for. That was phase one. Phase two of the demo is ongoing right now. We drilled 2 wells to do a subsurface reservoir test. We also do a bunch of water characterization because we operate this thing at full steam. To do some testing, which will happen here in probably February. And then we bolt on that DLE system and the carbonation back to it. And then through the rest of 2026, we'll be producing a battery grade carbonate at that facility. And there's only one other one that is of that scale that's operating like this in North America. That's going from brine to this type of carbonate. So that, when you look at the sort of hierarchy of projects and where they're at, E3 sits in the top, say 5 or 6 in North America, and globally, one of the few DLE projects that is this advanced. And part of that is because of where we operate. We're in Alberta, and we do this every day in the province. We produce these brines already today through oil and gas production. We have the infrastructure. It's identical in form and shape, from wells to pipes to facilities. The difference is that after we've gone through the gas processing, the water that we make, we take the lithium out of, and there diverges into making lithium carbonate. But prior to that, the process is identical to, say, a gas processing facility that's full of water, that they have to treat the water. So Alberta is a huge advantage for us in terms of both being able to move this forward quickly, but also get into the permitting and the understanding of how we operate.
What intrigues me about your story is you're basically taking some existing strengths we have with drilling and those, tapping into existing supply chains and talent. So it seems like a really good fit. Can you maybe just elaborate on that? And sort of, you do talk about the Alberta advantage in some of your investor presentations. That's not often how I hear the Alberta advantage talked about in other work I've seen. So maybe elaborate on that a little bit.
Well, I think if you just focus in on like the lithium industry, right? This is very unique in the sense that, and there are a couple of projects that look like this, but really Alberta stands out because how we operate is identical to oil and gas for lithium. And most lithium today is in remote locations. You look at the other Canadian examples, they're in the middle of nowhere in northern Ontario and Quebec. You have to build infrastructure. You have to build roads. You have to build power. You have to get the ore out by truck down to some local facility in a more populated area where you can do the processing, which we have not yet in Canada built, that second stage processing to actually make the battery products. So when you look at Alberta, we have the skill set here already. So this is a huge potential opportunity for the province, and it does diversify the economy, but it doesn't really change anything because we're going to drill the same well using the same drill rig, and we show that time and time again. We had a drill company out in November, and they left an oil and gas project and they went on to an oil and gas project, right? So the same skill set of drilling, pipelines, even the gathering station, the gas processing, everything we do already in Alberta, we will deploy to this project. And that expands into the permitting because we also use the same directives under the AAR for permitting. So really what we're doing is we're just taking the skill set that we already have in Alberta and we're getting it deployed out to lithium. And the benefit there, as you know, as an economist, is that, we're really solely tied to the oil industry right now in Alberta. And it's not going anywhere. Alberta is going to produce oil for a very long time, but we can operate a completely different industry using the same people without having to reskill. And to me, that's what really drives me every day, right?
Yeah, no, that makes sense. There's a really good fit there. And also the cycles in Alberta, right? When oil prices are high, you get more drilling, and then they come, they fall, you get the opposite. So you would see through these cycles, right?
Yeah. And lithium is not immune to its own cycles, but they're not the same as oil and gas cycles. So you can definitely be deploying people when you're down cycle on oil into the lithium industry and vice versa, and having a more steady, sort of employment and operational base.
So you have really a proven concept here. You've done the demonstration work. You, like you said, you're using existing permitting, your existing talent, supply chains, all those things. If everything goes right, I mean, there's changes in the market and everything. What's the opportunity we're looking at here? Like if you could just give a sense for our readers, like how big could this be?
Yeah, it's the blue sky potential for E3 and for Alberta. So just to give some context, our first phase will be 12,000 tons. We'll go to 36,000 tons at that facility. That's our plan right now. And that project, we believe we can build 4 more of across what we call the Bashaw district, which is basically Airdrie to Camrose. That's just our potential. So E3 can do about 150,000 tons a year based on the brine that we have in the ground. That's on par with some of the largest lithium producers on the planet today. And the big comment that we get from landowners when they come by to see the project or the AR or government or even shareholders is how simple the operation actually is. Because effectively, this is just a water treatment facility. We're just treating it for lithium. And so it's not overly complicated. It doesn't use exotic materials. It's just pumps and valves and piping to move the fluid and reduce the water volume until the point where you can produce a salt. And then you dry that salt out and you put it in a bag. And obviously, the development of that technology has taken a long time, but that that has come a long way, and the base principles are still fairly straightforward and simple.
Environmental impacts, concerns, like how are you addressing those? And maybe just speak to that a little bit.
Yeah, I mean, when you think of risks, the environmental risk is always something that a project like this or any project in Alberta has to account for. It's no different than an oil and gas project that's producing oil out of the Leduc today. The risk is identical. We're moving a water. If you're producing oil that has oil in it, we're not going after the oil, so it'll just be the water. We move it through pipes, we get it to a facility, and we treat the water. We put the water back down. There is gas in that water, and we separate the gas, and then we put it back into the brine, and we put it back down. But from an actual environmental impact, it's pretty minimal because the footprint's very small. The plant site's already disturbed ground, so we're not using farmland. We're going to a site that's already been ripped up, which can remediate back to farmland when we're done, but it wasn't at the time. There'll be a couple of wells that will disseminate through the area that when they're done, we'll use standard Alberta practices to reclaim most of those. The pipelines will all be 100% reclaimed once installed. So our full impact's pretty small from a land perspective. The other piece is water. We use 100% of our own water, so it's a closed loop system. Because we do use water in the process to do the stripping of the lithium. But we basically, from there, we just remove that water until we get to a salt. So we just recycle it all to the front end. And we deployed a zero liquid discharge philosophy. So we don't put anything back in. So we have a pretty cohesive story when it comes to that impact. Our P application did outline like noise impact and that sort of stuff that's required under our P application. And that's all public now, and it can be read by anyone interested. So, and that outlines all of the impacts that the project has.
And so you talked about the footprint that you have on lithium production. Can you compare that to conventional mining projects for lithium?
Yeah, it's less than 10% of a total land disturbance perspective. We don't have an open pit mine. We don't have a solar evaporation pond. Most of the reclamation happens as soon as you're done putting the installation in, which is standard Alberta practice. So that is very small. On the carbon side, one of the big things that I think we can do is from an operating cost perspective, about a third of our OpEx is power because we run electric pumps. Most of the processing is electrical because it's pumping water around. So the majority of our impact relates to carbon is just from power. There's very few other carbon sources on this project other than power. And so our plan is to build on-site power capacity, and that's what our application shows. And the reason for that is we have a power line right there beside the plant, which we will pull and push into as per our application for ISO. But the goal is eventually to build carbon sequestration because we already put the gases from the brine back into the brine. So we already have that operating. Putting a bit of CO2 from the exhaust from the turbines that we're going to build is an easy next step because we have the disposal already. And so that won't happen day one. We won't bolt on a carbon capture unit on the back of our gas, but it is technology that's out there. It's available. The Alberta government's been pushing it quite heavily, as has the federal government.
So if we fast forward a year, we're going to have this conversation in a year. I'm committing you already.
Okay, fine.
What do you think a year from now you're going to be talking about? Like, how much are you going to move the needle?
Yeah.
Do we have momentum here? How real is this?
I think if we can step to macro, and then we can go to E3 really quick. There's been a couple of big macro things that we've seen. One is that today, the G7 ministerial is meeting in Washington, and it's the 12th of January today, to talk about critical minerals. And the reported conversation that they're going to be having is about building reliant local supply chains in the G7 plus basket of countries, and what mechanisms they need to use to both support it from an economic perspective, which you've seen the Canadian government already implement with the Sovereign Wealth Fund and CGF and a bunch of other mechanisms that came in the budget, but also, blocking some loopholes that still allow the lithium to come into the North American Western world supply chain. And I think we don't know the outcome of this, but the fact that the conversation's being had right now shows the geopolitical tension that's occurred because of the dominance that China has right now on supply chains. And so we just ride the wave. We don't have a lot of influence in the decisions that get made, but we are following it very closely because it will likely very positively impact the project, because they're going to be looking for more supply from local sources that don't require Chinese processing, and that's us. So I think that that's where the tie-in happens. As we look through 2026, then I think you're going to see a bit of a market come back from the investment perspective. As the price comes up, we've almost doubled the lithium price in the past 6 months. I think you're going to see an upward trend still there. So I think we're going to see a very positive market, a lot of momentum in Canada and the United States and in Europe to get critical minerals supply, lithium being one of them, up and running. And so at the end of the year, that will likely lead to things like offtake agreements and strategics. That's what we're looking for right now, which support our project financing. And while that's all happening with the corporate team, E3 is going to finish the demonstration facility. We're going to get our FEED study done. We'll likely have published, if not be on the verge of publishing, our feasibility study, definitive feasibility study, which enables us to go get the project financing. From an economic report perspective, we need that Class 3 cost estimate. And as well as a lot of the permitting will be well through the process, if not starting to tie up, because that's already now out there in the market and we're working through it. So I think 26 is really the year that E3 goes into commercialization. We won't be operating obviously in 26, but I think it's setting all of the things on the table that we need so that in 27 we actually will start. Our plan is at least to start building this facility in 27. And the mountain we need to climb is obviously working through the permitting process, which is started, and the timeframes in Alberta are short relative to the world, but we still have to go through it. So we don't want to downplay the importance of working with our stakeholders and our local landowners through the process. And we are doing that right now. And then the project financing will be the next big mountain, which is, sort of comes at pace once your permits start going through and your feasibility study. So I think we'll be talking about where we're at there and how close we are to, if not at the point of FID, and how we're talking about staging the building of this project. That's our hope anyway. It's a big mountain for 2026, but we've got the team and we've got all the pieces in place now.
Well, that ties in nicely with one of the macro themes for us this year, which is, last year was the year of disruptions with the trade war. We're getting a taste of that too, through some actions in South America and Venezuela. And so I think all eyes are on Canada right now to say, okay, are we going to start executing on some of these promises to build big things and export more? So I think your story ties in nicely with that. Now, of course, there's risks, and things might not turn out the way we'd like. So what risks are you watching closely? What could go wrong? And then what will you need from the government? There's the market, but what are you going to need for the government to make this happen?
Yeah, I think we think about it from risk in terms of risks that we control and risks we can't control. So the risks we can't control are the market, the demand for lithium, what other supplies coming on, and sort of that drives the market fundamentals. The last couple of years has been tough in the lithium space because sentiment has been off from a investment perspective, and I think that the lithium price obviously came off, and now we're starting to see that turn around. As I mentioned, like the lithium price is nearly 20,000 a ton. It was 8,000 during the sort of lithium winter of May. Look at every lithium company stock price in May. It was not a pretty sight. Most of us have rebounded. Some of the majors are up 3x since that time, and they're multi-billion-dollar companies. So that's a big move for a multi-billion-dollar company to go 3x. The developers like us, they usually lag that, and so that puts us into like what we hope would be a very positive 2026. But that risk is there, and we felt it over the last couple of years. But I think you're starting to see that come back. I think, the demand risk is pretty low. Everyone's moving towards electrification in some way, shape, or form. EV sales have come off, but they're still growing. They're not as growing as people were projecting 2 years ago, but they're still growing. Every month we buy more EVs globally than we did the previous year. The big story has been in battery storage systems. These things have been deployed en masse and continue to grow. And the amount of hours that they have as backup are increasing as well, which increases the size and therefore the demand of batteries and the demand of lithium. So I think the market is robust and growing. I think the supply is the dynamic that you can't really control. There's been a lot of shortcutting from certain companies in Asia that have been able to bring supply on a lot quicker than you can in North America. Hence why there's some of these geopolitical tensions and some government action. So that's the stuff we can't control. I think the risks are there. Obviously, we've seen them, we've been feeling them, but I think that is we're starting to see some froth and some positivity in the market again, which is really, really good. As I said, the lithium prices move significantly. Our risk, I think the big thing is on the financing. I think that is the facility we want to build is big. We want to continually build it. So we want to set ourselves up for success in the future as well as for today. So that financing risk is going to play out in 2026 as we, go talk to all of these funds and these programs in the banks. But when you look at the other side of this, you asked about government. The government wants to build critical minerals, and where we've had for the past 10 years an inactive government, I think this one is very active. We'll see as the rubber hits the road on some of these projects like ours. There's not that many critical minerals projects that are ready to go at the stage that E3 is at. There's very few that will be, sort of ready to build by the end of 26. There are some. You've seen some moves with other companies that the government has supported, offtake and other things, which I think is a proxy to some of the options that might be available to E3 should we be successful when we get down the road through 2026. But that's when they really will start to come out, is later in this year. If they're available, that's when they'll be available to us. And we offer probably the first battery grade lithium in Canada to hit the market timing wise, maybe second after Rio Tinto. So I think there's at scale anyway. So I think that there's good reason. So there's, right now I'd say there's, with any developing project, there's always a risk, capital risk, that sort of stuff. But I think there's so much inertia right now behind critical minerals. Everyone is talking about them from a government perspective, from a funding perspective. They are the top of national security list right now. So I think there's enough sort of momentum and inertia behind it that you're going to see some of these moves happen very big in 2026.
Yeah. So Chris, I think you've done a really good job demonstrating the need for Canada to be a major player in this space. I think you've done a really good job explaining why Alberta fits with our existing advantages. We have the talent here. We have the resource here, which you're using a different way. And I think when I'm listening to you, I feel really optimistic that, we can actually turn talk into action and take our production, which is really not much in Canada, and exert more influence on the global stage, which is exactly what we need right now. So thank you for sharing your insight. We're going to be watching you closely and wish you every success in 2026. And we look forward to welcoming you back on the show.
I'd be happy to come back in a year and talk about how we've done. So thank you very much for having me on today, Mark.
Yeah. Okay. Thanks, Chris.